Britain's vote to leave the EU has sent shockwaves through financial markets. Joining me here at the FT to discuss what it means for investment banking is Laura Noonan, our investment banking correspondent. So Laura, what does this vote mean for banks in the City of London?
Well, I think if you look at the reaction of the bank's share prices, it means only bad things. We've seen some very sharp falls in share prices this morning. Deutsche Bank down 15-16%, UK banks down even more. RBS, I think, was the worst hit, down 34% at the open. So certainly investors are very concerned about this because it does raise a number of issues for the investment banks, many of which have large operations here in the UK, particularly in the City of London, and they're going to have to make some very serious decisions about those operations now, because London has been traditionally a base, and the idea is that you come here, you access all of the other infrastructure here, you have like legal firms, talent, all of that, and then you use London as being the base to passport into the rest of the EU. That only definitely works if you are in the EU. Now, it isn't definite that you can't do that through some kind of a bilateral agreement down the line, but there's certainly very significant uncertainty there, and that is why we're seeing the investment banks really get battered today.
So is this the party's over in the City of London now? We're going to see an exodus of jobs, of activity. We're going to see a shift to places like Paris, Dublin, Frankfurt. Is that what's going to happen?
I think that you could confidently say that there are going to be fewer people working for investment banks here in 3, 4, 5 years' time than there are now. The big question is in terms of the size of the shift. So yes, banks are going to have to make alternative arrangements, but banks are trying very hard not to be pinned down on those just now, because we literally have only had the news in the last 24 hours, and banks had not prepared for this. Everyone thought it was going to be an in, so banks hadn't really been seriously contemplating. I mean, they had made some level of contingency plans, but as things progressed in the last week or so, banks thought this is actually going to be in, this is going to be fine. So banks are really hoping that there's going to be some kind of a solution which is going to allow them to keep a lot of their workforce here in the UK, and then offshore some of them to some of those other cities which you mentioned.
And these big share price moves that we've seen, you know, the Wall Street markets are open. The big US banks are down some 6%. The likes of Bank of America, Morgan Stanley, Goldman Sachs. But the big European banks are down between 15 and 20%. I mean, that's many tens of billions of pounds of value wiped off these big financial institutions. Are we talking about a new financial crisis here?
Well, I think when you look at the performance of the European banks, and you're right, the European banks have been very, very severely hit, you have to also view it in the context of the increase in the share price of the European banks earlier in the week. So basically, as it began to look as if it was going to be an in, we saw fairly significant rises in the European bank share prices, also in the UK bank share prices, also in the cable rate. So we are seeing an element of just taking back those increases.
Okay, and are there any silver linings to this?
I mean, there's some cause for hope in that there was a lot of concern going into this on the market side in particular, because we've seen so much contraction in the liquidity banks are actually able to give to the markets because of the various rules brought in the aftermath of the financial crisis. There was a real fear that in the event of an outvote that there could be absolute chaos, that the banks simply didn't have the capacity to absorb the kind of levels of activity, the kind of selling that we were going to see. Now, all the indications from the banks, and it is early days yet, but certainly for the initial 12, 14, 16 hours, all the indications are that they have been able to keep their doors open. It has certainly been a fairly fraught time for them, but there aren't any indications of a large-scale breakdown.
Laura, thank you very much.
Thank you.